Good morning, traders. It's 8:01 a.m. Chicago time on Monday, the 16th of May, 2016. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. Overall, things are shaping up in a what seems to be a mixed sentiment in the overnight session. A fair amount of movement overnight. Um, across the board, but nothing really tremendous or volatile. But after Friday's trend down, so we'll go over the numbers here in a minute. But overall, it's the beginning of the week, so we want to look at the weekly calendar and see what's at stake here. Tomorrow has some key numbers out of the UK: CPI, PPI, RPI. Let me turn down my my news feed here. U.S. housing starts, building permits, and then we have Fed's Kashkari, Williams, and Kaplan, ECB's Prate, Nui, and Costa. Lots going on tomorrow. Today, fairly tame. This morning, we just got the Empire manufacturing number. That gave us that small move down. And then the NAHB housing market index in the U.S. at 9 Central, 10 Eastern, expecting 59. And then at 3 o'clock Central, 4 o'clock Eastern, we're looking for total net tick flows. There's not much on the calendar for earnings, nothing worth mentioning. Let me switch to the daily here. Yeah, looks like not much worth mentioning here. But the big day this week, well, Wednesday, so Tuesday's full. Wednesday, we have the ILO unemployment out of the UK, Eurozone CPI, ECB's Villeroy, and Fed minutes. So we got to look for those Fed minutes on Wednesday. And then on Thursday, we have the Eurozone current account, UK retail sales, Eurozone construction output, and the Philly Fed leading index. But also we have ECB's monetary policy and Fed's Dudley. Thursday looks fairly crowded. We have basically a pretty busy Tuesday, Wednesday, Thursday, and then on Friday we get existing home sales. So this whole week has a wide distribution of numbers in it. A wide distribution of numbers in it, and so we're looking at a fairly busy week. Let's switch gears here and look at what we had from last week. Oops, you gotta disregard that announcement that the AMA was rescheduled from last Thursday to tomorrow at 3:30 Central, 4:30 Eastern. The public live AMA is scheduled for tomorrow. The link to register for it is in the YouTube video description. It's also being scheduled and streamed over Twitter. So register. Even if you cannot attend, you'll be sent the recording if you register. That's again for tomorrow's AMA at 3:30 Central, 4:30 Eastern U.S. time. Let's start by looking at what was expected for Friday pre-open. This is the primary expectation on Friday. Well, I was looking for a rotation up in the morning. We were opening in range in value, but the primary hypothesis is for selling towards 40.50. That's the primary hypothesis. The market is one time framing down, as you can see here. So that position goes with the trend. So, as I said, open auction, push higher towards that 2060 area or so, and then a rotation down with a target of 2040.50. And that's the hypothesis that worked out. Hypo 2 was a test high early that a chop in the morning, and then a test lower, finds buyers in the 2051, 2050 area, and then starts moving its way up. The primary hypothesis The secondary hypothesis yesterday had the objective of pushing higher into the 2069.75 area. Here's what actually happened. Again, we always want to review what the plan was versus what actually happened. The market ended up opening a little bit higher than expected. During the trader bite, the market was a little bit lower. It pushed higher right away, just as expected, into the point of control and through, and then we finally get the rotation down. And where do we end up here? We end up at 38.50, 2 points below our target, and then the market moves the point of control down from above at 2060-ish down towards 2042.50, closer to that MC point of control at 2040.50. So what we have here is an auction that is still fairly intact. As I shift this profile forward, it starts to fill in even more, but we see that we're essentially splitting up the trading among these points here. So what we have is a middle distribution right here. We have a lower distribution, which we're in now, and we have an upper distribution up top, but we also have an additional distribution even higher than that in the 2085 area. 4 distribution microcomposite. The market's in balance, but it's also seeking balance within that balance. It keeps moving from high volume node to low volume node to high volume node, and so on and so forth. And that's why these shapes keep forming. So this morning we would be opening right against the close of yesterday, right against the point of control, creating a somewhat of a kind of an expectation for chop this morning. And that's how things are shaping up. So again, the primary hypothesis for Friday, push up to test through the point of control and down to 2040.50. That worked out with a strong open pullback, a retest, and a drop, as opposed to just a push and a drop. And that's, I ended up looking for the short and then having the cover and then looking for the short again for a target of 2040.50, as I announced on Twitter. Okay, so that's how things shaped up on Friday, and that's how things are shaping up overall. So in these last few weeks here, we are really just snaking around this really big area. I know this chart seems messy with all these flex levels on it, but once we zoom in, they clear up. You see how we are stuck in this high volume area with the point of control for this high volume area at 61.25. That's the composite point of control, or the big picture point of control, going back to October 9th, 2013. That's the most valuable price in the area, and we keep trading around it, above it, below it, test to it, and so on and so forth. And I expect that this is going to continue. This would continue through the week. If we look at the overnight session to shape our overnight view, the overnight session tested lower, opened, and then immediately tested lower. So here's the reopen. We tested lower, pushed to 2035. If you recall, and this is a flex level, 2035 is the high liquidity level. We've traded around and through this price a lot, but if you have if you have a S5 bookmap or something like that, you would be able to see that there's just a ton of liquidity in that area that actually trades out. And this morning it held the sellers, or the overnight session, it held the sellers at 2035, and it bounced right back up for a quick rally during the Asian session, and we've been completely sideways since. The profile is P-shaped, so there's some short covering there. Potentially we opened, dropped, and then it seemed like the market did not have anywhere to go, nothing to price in. Very quiet session. after the after that rally. So, uh, with those facts behind us, let's switch to a more zoomed in chart. It's getting, and note that these levels, and these were updated this morning. Note that these are the key levels in the region. Look at how clustered they are, just very, very noisy. And the longer we spend in a balance area, the more clustered the levels become. You get more and more inputs as we go along. Real quick, I want to show you what's happened over last week. So if we look at the weekly profile here, we could see that we were one time framing down. So we have the peak, we have one time frame down, one time frame down. Last week we broke the one time framing, and it looked like we were forming a base to reverse from the one time frame down. And you need to keep that in mind that despite the fact that we had dropped last week, actually could not take the prior week's low, the low of May 2nd's week. And this is an indication here for a swing that things may be changing, and we are potentially starting to push towards that 2105 area. Just take note of that. The one-time framing down has been breached, and it's starting to rotate up and has held last week's low. If we open and we hold these areas, especially the low of the 2nd of May, the week of the 2nd of May, I have that recorded as a critical one-time frame level on the flex levels. We're likely to start rotating up and pushing for 2105. That's what the weekly is showing. The monthly, which has disappeared here. Where's my monthly? All right, well, the monthly has, oh, here it is. The monthly, if we look at month on month at what we did, what we've done, remember we have passed the middle of May now. Uh, on April, all we've done on April is traded in between the high volume nodes. So if you look at April, we still haven't touched that 2084 above 2084.85 high volume node. We have traded a lot in the 2040.50, and we are just stuck in between. This is May against April. This is April here. So overall, the big picture is we're still trading inside of April's range and have not done anything but test almost to the upper high volume node. We've tested the low volume node. And to me, if we can break through that 65 quarter, if you recall that big level, 65 quarter, 65.50 again, we're likely to have a run at 2084, and that sets us up for a pullback and a run to 2105 again, just as I said a minute ago. And then finally, if we look at Friday, and what we've done on Friday, we've basically just trended down for the week. We gapped up and we have trended down for the week. So on the daily, we have a one-time framing down. We have a high, lower high, lower high, lower high. So we have one-time framing down on the daily, one-time framing up potentially to continue on the weekly. A little bit of a conflict. And then we left some singles out on Friday. I've noted those as well, 49 and 60 and 51 and a half. We have singles. Those are the key areas that we were likely to test on a push up this morning. And for this reason, the fact that there is conflict and we are unable to get out of the low of Friday. For this reason, the expectation this morning is that we chop around. We're likely to test this this low from Friday at 38.50, but the expectation is we start to shift shift towards pushing higher on the on today's action. So that would be hypo 1. Hypo 1 is an open auction in range, a push lower, an attempt at the low, but then expecting this 2049 quarter to go to continue that P shape from the overnight session to the upside. The targets for towards the upside, if we can get above 2051, that would be nice. But in general, I expect it back up around that 2051, 2055 area for Hypo 1. Hypo 2, open auction in range, an attempt at 2048, again from below, finds its sellers, rotates down, and then starts walking itself down into that 2026. The 2026 is the monthly pivot price. The monthly pivot price, again, I talked about this before. 2026 is a big area on the monthly. If it gets down there and breaches it, you are likely to see a quick flush through 2026. And the next key area below that is 2015.75. 2015.75 comes from breaking up the profile into two major areas. Here's your 2015.75, which gives us the upper distribution up here on this profile, and it splits it from the lower distribution. A very, very key price, this pink line right here, 2015.75. That is, if we get failure to move upwards, that is where we're likely to head. Okay, so that's how things are shaping up. Again, it's a week full of numbers and releases and so on, so save your bullets. If you do not see what to go after, you don't see high probability trades, however you define those, be it your fibs or volume profile or price action, whatever, it doesn't matter. Just keep your hands in your pockets until you get into an area of interest, then look to engage the market. It makes no sense to engage the market early in the week and to take losses and then to have to mend that for the rest of the week. There's a lot going on Wednesday, Thursday of this week. Okay, good luck, and I will catch you tomorrow. Remember the AMA tomorrow at 3:30 Central, 4:30 Eastern. Okay, take care.